Hello, everyone. Super excited to welcome you to the new season of Find the Way Pod. In the first season, we were trying to explore how entrepreneurs, investors, and all community members in Latin America have been finding the way to make phenomenal things happen. And for the new season, we're going to have a little new format where we have a new co-host. His name is Bautista Cardenal, and he's coming from Argentina, from a little town called Necochea. And this new season, we're going to have more people sharing more in-depth stories about each vertical. But super excited to have over here Bautista. Who do we have as a guest for today?
Hey, so pretty thrilled to join this journey. We'll have Alex Gálvez and Ivan Montoya. We're going to get into early stage capital in LatAm, how it was over a couple years ago, how it went all over to a boom in 2021, and how it's looking now and into the future. All the challenges that founders are facing, that investors are facing. And let's see how it goes.
Cool. Without a further ado, let's get Alex and Ivan onto the show. Welcome to the Find the Way podcast. In this show, we will try to explore what is happening in emerging markets and how entrepreneurs, investors, and communities are simply finding the way to make phenomenal things happen, regardless how volatile the environment may sometimes seem. Shall we get a little intro for you guys? You know, a lot of people know you, Alex. You have one of the most famous podcasts in the region. Ivan, you're very known in the region as well for the Latino entrepreneurs, but for the audience who's mainly coming from Europe, Asia, Middle East, they might not know who you are. So you want to give a little intro to you?
Sure. So I'm Ivan Montoya to those in the U.S., Ivan Montoya to everybody in Latin America. I'm originally Colombian. Have been living in the Bay Area since 1995. So I've been here through the start of the start of the internet. When I got here, the month before I got here, Netscape went public. Worked in tech most of my career and started angel investing in Latin America in 2019. I invested in a Colombian company called Picap. And then since then, I've invested in 40 companies in Latin America, mostly Spanish-speaking Latin America, primarily as an angel, but more recently as a fund manager.
Cool. And Alex?
A little bit more about myself. I'm originally a lawyer, and I was not very tech-driven at the beginning. And then I started to seeing a lot of changes in artificial intelligence, blockchain, biotech, and some other technologies like 10 years ago. And I decided that all the work from a lawyer was going to be automated. So I was in a part industry. So I decided to move and started angel investing in Latin America. This was like very new in the region on that time. And yeah, had a little bit of luck. Ended up investing in some great founders. I invested in over 60 companies in the region. Some of them like Fintual, Clara, Aplazo, Picap as well, and many others. And then I decided recently to start a VC firm because I was like having a lot of impact as an angel, but you're just one person, and if you want to have like a lot more impact and help more people, help more founders, you need to build a team. And if you want to build like an enduring venture capital firm and really invest in a scalable way, the best way is to build a company and just do that.
Yeah, absolutely. So you two of you have invested in a little bit over 100 different companies. So that's a few. You have a little experience from the region. It's pretty known right now at this stage is that LatAm is going through a huge boom, especially in certain verticals when we go to fintech, e-commerce. We talked with Eva a little bit earlier about logistics. It's a huge one big mess still, the whole supply chain of Latin America. So but that means that there is a necessity for a huge amount of companies to come and solve problems. Why are you still investing in the region? You've written loads of great tickets. You've been seeing great success stories coming out of the region as well. Why are you staying in the game? Why are not you going to do something else?
I'm very bullish about Latin America. The thing I've seen over the past 7 years is like the ecosystem growing a lot of different companies, a lot of great talent, like all the people that study an MBA from in Harvard, Stanford, and the top university in the United States want to come back to Latin America and build. like some years ago they wanted to go into investment banking or other stuff. So you see a lot of talent from good universities, a lot of talent from unicorn management teams and all that kind of things, and a lot of talent from second or third times entrepreneurs. So I'm very bullish in the region. I've seen it grow like a lot over the past couple of years. And the thing I like a lot about Latin America is that if you build a great company, you can impact like 80% of the population, maybe 90% of the population. Like for example, the Nubank, it has billions of users in Brazil and all over the region. And in other places like in the States, I mean, the economy is super huge, but like normally you build something that is just impacting like a sub part of the population. So I think we have a lot more problems in Latin America, and that means bigger opportunities, a very young population. So I think if you build a great company here, it can be like super big.
Yeah, I would add a couple of things. So one, I agree, just impact. I mean, it's just not even a comparison, right? When you see companies in Latin America and what they're trying to do, the potential impact on day-to-day lives of this huge region, right? I'm going to get my math wrong, but 600 million people, right? It's huge. I think the second thing is it's super early. I tell my friends here in the Valley that to me, Latin America is like Silicon Valley in the 1970s, right? There's going to be ups and downs and whatever, but we are like at the very beginning of this curve. So, despite Nubank and some other folks who've had early success, Mercado Libre, et cetera, it's so early. It'd be like saying, Silicon Valley's done just because, you know, um, you know, Fairchild Semiconductor was a big win, right? I mean, it is super, super early. Um, and then I think three, I would agree with Alex. I think the talent level and just the ecosystem really at the talent point. And it's not just, I agree with Alex. There's some amazing founders who have, stellar resumes, right? They came to school in the US, maybe they've worked at prominent companies, but I get super excited, finding the first time founders or the kind of overlooked founders. And there's some amazing talent. Like if you look in the Valley, uh, people are used to backing people of all sorts of backgrounds, right? It's not just one profile. And I think that Latin America has a huge opportunity in that area as well. So to me, it's just untapped opportunity with huge impact. And as an investor, you play a very small role in the journey, but just to be part of that process is awesome to me.
Absolutely, absolutely. Then, if we take a little look on the history that you've witnessed in your investment career now in Latin America, is that the industry was pretty much non-existent 15 years ago. And now we've seen a huge increased amount of VCs, a lot of first-time funds that are coming into the region. We have more and more angels who made a little bit more money. Let's say Latinos who went to the US, Europe, they made a couple million over there. They're coming back to the region and funneling more cash into the region. We are seeing this relatively huge spike in terms of capital allocated to the region, especially not a couple of years ago in 21, which was a record year, between 15 billion to 20 billion dollars of private capital allocated to the region. Now there was a huge decrease last year, as all around the world. What else have you been seeing since you started? And so what has really changed from the early days when you started investing in LatAm?
Uh, like right now, you have like best practices in Latin
Mhm.
America, and also you don't have like investors that want to take the majority part. Like you look like you start eliminating all those bad practices, and that helps a lot. Like the flywheel start moving.
Yeah.
I mean, I'm relatively new to the region, especially compared to Alex, right? So I can only talk about the last few years, and
When was the first check that you wrote in LatAm?
it was Pickup. It was in February, March of
2019.
2019.
Okay, so there's still 4 years
Yeah.
of
So
perspective.
yeah. So it was before Rappi got their big fundraise from SoftBank. So it's still there's kind of a pre-SoftBank into Rappi and a post-SoftBank into Rappi phase, in my opinion. And I think the biggest change I've seen in the last 18 months kind of related to the SoftBank comment, is um, just the laws of physics in business never change. Sometimes people forget about them, and then it comes back. I remember experiencing this as an operator myself in what was it, the year 2001. I worked at a telecom company in the US. At one point, we were worth $10 billion. I think in March, or whenever the peak of the NASDAQ was, 2001, I think March. And then by June, the company was worth less than $1 billion. And by August, we were in bankruptcy. And I remember on the upswing, a bunch of us were saying, like, oh my God, why is this company worth so much? What is going on? Right. And I think there was a period of time where founders in Latin America got, especially those that had a certain profile and were in sexy areas. And now the laws of physics, guess what? They're back. And so I'm seeing both, obviously, the ecosystem respond to that, but also you're seeing founders who either because their profile was different, they couldn't raise that capital. They were always living in kind of a normal laws of physics. And some of those folks have built some great companies. Our friends at Picap, I don't want to say anything that's not that they wouldn't want to share, but those folks make a lot of money and are very profitable and barely raised any capital. And so, so there's folks who've always operated that way. But I think in general, the ecosystem is getting much more focused on fundamentals.
Yes, and that's an advantage in Latin America. Like we're not used to that much cash, so founders know that they need to build like a profitable business from the beginning, and also investors' money gets you further away in Latin America. Like salaries, you have an amazing talent, but salaries are lower than those from the States or Europe. So like maybe with 200 to 300 US dollars, you can really build something with a good team.
Mm-hmm. Absolutely. And has that changed, let's say, especially now, post-COVID era? A lot of remote workers have been coming to the region. A lot of people working in tech, they know that they can work to the US, they can work to Canada, they can work to Europe. The salaries are starting to get inflated. Have you seen that, this is becoming a problem for some of your portfolio companies, that they're not going to be able to hire that talent? Because yes, everybody talks about um, the amazing talent in multiple different countries in LatAm that you have, but still, compared to, let's say, the more Western world, there's a huge gap. You can have these very bright guys and girls who are able to make phenomenal things happen, but on average, still the people are very behind in terms of seeing the roller coasters of 1, 2, 3 times working in a startup, working in a larger corporation, and seeing the ups and downs. And when you come to Latin America, they're still playing in the minor leagues. Are you seeing this as a challenge in your portfolio firms, or your something like that?
Like it's always difficult to find amazing talent
Yeah, yeah,
and to retain it. Like you can have a lot of talent, but there's always like a lot of competition for that talent anywhere in the world where you go.
that is true.
Yeah, I don't know. It's maybe I work too early with founders, but relative to the stage that they're at, you've got 10 people or 5 people or whatever. Obviously, talent is always hard, but it is way easier, in my opinion. I mean, think about somebody here living in the valley, right? Not only are you competing with everybody and their mother, including big companies, you're also paying a
That
lot,
is true.
right? And I think in Latin America, again, it's maybe a little bit more old school, for better or for worse, right? They'll hire folks if it doesn't work out, they leave, right? But it is such a lower cost per unit, right? Now, obviously, if you're hiring a CTO or somebody at the senior exec team, maybe a different story. But to get an idea off the ground, or get some initial, if you've got some initial traction and you need to scale the team, it's always hard, right? But I don't see it as being any
But yeah,
different.
in
It's
early
not like
teams,
I don't know that.
you see a lot of commitment from people. Like they really want to build something great. Like you see like the energy in the people working, that they want to put the long hours and maybe work like as much as is necessary, like, and they're willing to sacrifice salary for equity, and they know that the equity can be really worth something in the future. So like I think that you see like a similar ecosystem than the one from China maybe 10 years ago, or the Southeast Asia. Like people are willing to work a lot to
Hmm.
build meaningful things.
I agree with Alex. I think the better comparison is Asia
Yeah.
and other places as opposed to the US. But let's just for the moment talk about the US for a moment. You know, you do a $5 million seed round in the US, and you do that same seed round in Latin America, that 5 million goes so much farther, right? But it is comparable, right? One of the companies I backed, they did a $5 million seed round, and here in the Valley, I see $5 million seed round. So it's not for the same dollars. The cost is so different, right?
Absolutely.
So anyway, so I don't view it as minor
Yeah, yeah.
leagues or anything like that. It's just that you're
No,
different.
no, it's true. We were making this comparison as well with Eric, and in between Europe and Argentina, it's 4 to 5x less in the cost, operational cost overall. I can't imagine to Silicon Valley it must be even greater. If you guys don't see talent as a challenge, what is the main challenge you're seeing today in the ecosystem?
I'm to be honest, I think the biggest challenge is funding. I think there's a maybe I'm contrarian in this perspective, but I think that relative to the opportunity, there's probably a funding gap at all levels. Right? I had this conversation with the VC in Mexico. I'm like, because I focus in on pre-seed and seed, and I think there's a funding gap there for sure. And I'll go deeper into why I believe that. But his point was, he was like, Yuan, there's a funding gap at all levels, you know, but there's extreme funding gap at Series B and above, right? So I think a lot of the companies that did raise a lot of capital during the bubble period and scaled, those folks have, those folks are facing existential threats in some cases, right? Because of the series, what I'll call the Series B crunch. But I don't think that's a Latin American thing. I think it's very hard to raise a Series B in the US. So it's a global thing. But I think the other areas pre-seed and seed. If you think about it, the prominent VC firms, in at least in Spanish-speaking LatAm, and most of what I'm saying is Spanish-speaking LatAm. Brazil, I think, has different dynamics as its ecosystem. But I won't pick names just because I don't know if they would want me to talk about it in certain ways, and it's not necessarily good or
Yeah.
bad. But you get funds that maybe 100 million AUM, whatever. At this point, they need to the dollars they've got. They need to invest enough capital, and so they're at seed plus or pre-series A, series A,
Hmm.
right? And so if you're pre-seed and seed at this point in Spanish-speaking LATAM, great, you got angels, you got other folks like that. But relative to when the stock market was up and everybody's feeling rich, I think there are a lot fewer angels deploying today than there were 2 years ago. I think AngelList as a platform is not providing as much capital. I think family offices are pulling back. They're much more conservative, right? So if you can make it to Series A, pre-Series A, you've got, I think, a lot of different options, but you got to make it there. So to me, right now, it reminds me a lot more of what the US was like in like 2008, 2009, where basically VC started at Series A. And then what you saw is like a 10-year period where Floodgate and a bunch of other folks started. You started seeing seed funds happen in the US. I think we're in a similar place right now in Latin America. And I think the last couple of years where money was loose, you had folks like me entering the market. You had people who are like, hey, let's go make this happen. And I think you have a lot, in my opinion, I think you have a lot less of that. And so getting that first check, I think is harder now than it was 2 years ago.
Yeah, I agree with Ivan. Like, there's still need for a lot more capital, and also another one of the challenges are exits. That's like the same problem. If you have more exits, you start to see like the capital being reinvested in new startups. I mean, we're starting to see more IPOs in the Nasdaq, and maybe on the local markets in Brazil, but not so much in Spanish speaking Latam yet. I think Brazil is a little bit ahead of Mexico and the rest of Latam, maybe 4 or 5 years. You see a lot more exits in Brazil, but I think we still need more exits in Spanish speaking Latam. But like as Ivan was saying, if you build a great business with good unit economics, a lot of growth, then exit is not going to be a problem.
Absolutely, absolutely. And then if we take a look on that, how are you evaluating your deals and the cases that are coming to you? Both of you have invested in multiple different companies at very early stages in the region. You are very well known, which allows you to enjoy the privilege of having phenomenal deal flow compared to a lot of other people who are let's say not so known. You, because of your presence, because of your podcast, Alex, you get very great insights, deep insights to the region. Even you're all around the place all the time, at least according to social media. Either you know, so it's very unique position you have put yourself into. You put a lot of effort and hard work to get into that position. So, what are you now doing in order to pick up the winners? How are you conducting your screening and your due diligence?
Yeah, maybe I'll take a first stab at this one. I mean, for me, it always starts with are they solving a big problem, right? Because I think I forget whether it's YC or somebody said the biggest reason companies fail is because they're not solving a problem that people desperately care about, right? And especially at the earliest stages, there used to be a phrase that you have to be 10x better than the alternative, right? I don't know whether it's really 10x or not, but there's so much inertia that unless you're solving something that is, the alternatives are really terrible, yours is a much better solution, then it doesn't really, it doesn't really matter, right? So for me, that's one of the biggest things. I think the second thing is I meet a lot of founders. I take a lot of first meetings. I think it's almost impossible at the pre-seed and seed stage to, to truly evaluate companies just from pitch decks. It may be possible, right? But I think things change. I met with a company over the last 3 months whose revenue went from who tripled in 3 months and tripled at like a huge order of magnitude, right? I met a lot of other VCs who met with this firm, and they're like, "Why are you spending time with them?" And now here we are, right? So I think you have to meet. You have to meet a lot of people and track them over time because things can change. I think the unit economics are fundamental, like Alex said. There's just, in my mind, because of the funding gap, and who knows how long the macroeconomic environment stays the same way, I tend to have a philosophy that the company needs to be, at least today, in my opinion, needs to be in a position to be break even pre-Series A, just because it may be hard to get that Series A for a while, right? And that may be a very different philosophy from a few years ago, and it could be different in the future if capital becomes more available. But for me, the unit economics are super important. And then I like to back founders who've been in a capital constrained environment for a period of time, whether they bootstrapped or they got small friends and family round and had to persist for a year, just plugging away because the culture of those companies is very different than others. But if I had to summarize, meet a lot of founders, track them, and then really focus in on, are they solving a big problem, and are there early signs of product market fit, like early signals, like huge increase in revenue or something along those lines.
Yeah, I think I like founders that are solving like big problems, and but I'm like, for me the first are are the founders. Like, I want to invest and work with people that I really want to be the next 5 to 10 years. Like, really talking with them, working with them, getting to know them. So I really want to invest in people that are smarter than me, and then that can then where I can learn a lot. So yeah, in this environment, also unit economics is like very important. But I'm like super founder driven. Uh, and yes, Ivan was saying like this is a long term game. You talk with a lot of founders that maybe it's not the right moment for them right now, but in 6 months, 8 months, maybe 1 year later, you talk with them again, and they've learned a lot, they've grown a lot, and they're in a better position to really receive capital and start growing a lot. Even I see founders where I talk with them, and I really like the founders, but not the company. And then 2 or 3 years later, maybe they're starting a new company with a lot more experience, and now it's the right moment to invest in those founders.
And if the case is in a way that that you're loving the problem that they're trying to solve, and let's say the background check on the founders is still there? What are some examples why you're not investing in those cases? What are you then going above and beyond and investigate on these things? It's a very, at these stages, the investing game it's a very different game when before you have something to analyze more in depth. You're betting on high risk, high reward type of game. So if the market is there, you feel it. You've got to know the entrepreneurs, and you're still not investing. What might be those type of cases?
Sometimes everything's like good on paper, but like you don't really like love it, and that's okay too. Like maybe the market is fine, the entrepreneurs are good, but like good, but maybe not super excellent. And then sometimes I'm just honest that like I I I don't find anything wrong. I just don't love the company and the opportunity so much to invest, and I don't know. Sometimes it's just that way.
Yeah.
Yeah, I'll do two examples, not with specific names, but just kind of the dynamics of those. I'll do one the pro case and one the con case, right? In the pro case, I met a founder a few years ago who was in the car financing space. And I had a perspective that that market was big enough to have multiple players. I had some concerns about some of the leaders. And so I liked in principle what this person was doing. And but it was so early, hadn't even launched, right? And so in that case, for me, the biggest factor, and it's hard as an investor because you're on the outside, you're not in the middle of it. So whatever investor says, they don't really know what's really happening on the inside. But the best you can do is observe, right? And so in that case, I told the founder, let's work together for 3 months. And over the course of 3 months, I saw the performance of the founder and the team, and basically use that time to gain conviction and understanding of the business. If I had to make a decision on the spot, I would have passed, right? And so I think at this stage, like you said, because you don't have data, you have to generate data, and this depends on your model and how you work with founders and so on. So my model tends to be fairly hands-on pre-investment. And then there was another one where everything on paper was amazing. Founder was incredible, had incredible background, super connected, very smart. Got into YC. I met these folks before they got out to YC, but they were in a space that there were like 5 or 6 other also super talented, whatever, and I couldn't figure out who's going to win. I couldn't figure out, and I talked to a lot of other people, and at that point, I was just like, it's just, one of these folks is going to do incredible. I just don't have conviction as to which, so I'm going to back out. So it's sometimes they're great companies, so it doesn't have to be you're souring on them. It's just you've got to have conviction, right? I think as an investor, and if you don't have it for A, B, or C reason, there's going to be other opportunities. So. And that founder found other folks, right? I recommended that founder to other people. So it's not a zero-sum game. I think that's the biggest takeaway for me after all of my early stage investing is like, sometimes you pick them, they do well. Sometimes they don't. Sometimes they're better fit for other investors, right? And you just cheer everybody on,
Exactly. And you don't need to invest in all of the great companies. You just need to find great companies in the ones that you invest. Like you don't have to be in every company.
In this case, Ivan, you mentioned
Absolutely.
that you are pretty hands-on pre-investment. What's your approach, guys, after investment? Because you have made a couple investments, over 50 investments. That must be pretty hard to track as well. So what's your approach after investment?
Yeah, I'll wrap up just on my end real quickly. What I do, it depends very much on on the founder and their situation. There's some folks that are just like, they're off to the races, and I just get out of the way. I just do, if they need introductions to other investors. So it tends to be very high leverage things, right? Like I imagine all investors connecting them with other investors because it's in your interest to help them raise capital, right? In other cases, I tend to focus on the pitch a lot, right? Usually I'll invest in a company where the operating metrics or the core business itself is very strong. But maybe you've got some founders who, you clean up certain things in how they present their story, or because you've seen thousands of pitch decks, you can add some value in that to the founders. And it tends to be very high leverage, right? Because it's a strategy document at the beginning. So you're able to communicate your perspectives and hopefully help them. Um, and then it just depends, right? But I tend to be, ironically, more involved pre-investment, build the relationship, help the founders, and then post-investment. It just depends on what they need. In some cases, I meet with founders, every week. In other cases, I meet with the founder once every 3 months, right? So it just depends.
Yeah, exactly. I agree. It depends a lot on the founder. And normally at the beginning, you can, like, if they're really early, you can help a lot more and have a lot more impact. Like, if you help them find, like, it's a B2B and you find that 10 or 15 first clients, then you're going to have, like, a lot of impact in the company. So I try to spend a lot of time at the beginning and help them a lot. And as Ivan was saying, like, the great founders, they don't, like, if you help them, that's fine, but probably they're gonna do amazing with or without you. Sometimes like, different founders in different stages need different kind of help. Maybe if they're not doing so well, help them like sell the company, like do like a small sale, or like, even if they close the company, normally they need someone to really talk with them and help them and help them, like, in the psychological part. So, like, it depends a lot. I try to talk at least once every 2 months with each founder, but, like, it depends. I try to add value when I can, and not be in the way when they're moving, like, really fast, and that's my philosophy.
Yeah, I would agree. I think the other thing I forgot to mention was, for me, a lot of it is bringing your network to the founder, right? So if that means bringing your network of people you've co-invested with because they're in the middle of a fundraise, then that's what you do. If it's operators, right? Whether it be operators at companies similar to them in the US. I've had many cases where I've worked with founders where they're the such and such of LatAm. And part of my job is to get in touch with the people who are the such and such in the US, right? And see if we can bring them on as advisors or whatever. But these are super high leverage ways that are really, like Alex was saying, you back a founder, you back a founding team because they're amazing, right? It's not because you're going to go help them. Like, you're not, as an investor, if you do that, it's game over, in my opinion, right? You're backing incredible people already, and then what you're doing is you're giving them some information or some connections that help them, shorten their cycle time by a month, by 2 months, right? Because they've got access to somebody who gives them some best practice or whatever, that so they don't have to make that same mistake, right? Um, but it's largely, your network.
Absolutely, absolutely. Hey, then if we jump onto into the picture, for the folks who are coming outside of the region, you have been spending so much time there. You know the people, but there are a lot of fears, loads of them from people who are not that well known, or they don't know what is going on in Latin America. They see the news articles, they see people dying, they see the drug traffics, they see the volatility in terms of the local currencies. So then the question comes, and we've been receiving quite a bit from family offices, from VCs, from angels, from private equity firms, is that why the heck would you like to be there? Even though it's a big market, it tremendous opportunities, so loads of problems that need to be solved. There is an increasing middle class in multiple different countries in LatAm. So there's going to be inevitable demand for loads of products and services. But then still their fears are, what they've been building up throughout their whole lives. Um, is there anything that you would be able to advise for these people outside of that? Hey, come and visit and take a look and spend time with the founders. But if they don't have the opportunity or the time right now, how do you start reducing the fears about the region? What are the easy steps to get into the game?
to start, like almost all the funds in Latin America are domiciled in the States or in Canada, and almost all the companies are also like Delaware C corps or Cayman LLCs. So on the legal part, you are covered. Yes, as you were saying, I would advise just to come here and visit. But yeah, we do have like challenges in Latin America. Like like everywhere in the world, like there are a lot of challenges. But also you have like industries with a lot of challenges and other industries with a lot of opportunities that are doing great. Like in this environment, you can always find great industries or challenge industries. And also, I think that all these problems and challenges are part of the opportunity. Like if you really solve
Yeah.
them in a good way, you can make a lot of money. Um, yeah, but that's basically. I think like also the population is really young, and that's a huge opportunity.
Hmm.
Um, yeah, but I mean, political challenges and currency challenges, those are real problems. But like for example, I there are some companies that are helping people like do have a bank account in the US with stable coins, and that's
Hmm.
a big problem here in Latin America, and a big opportunity also. And these companies are like growing like super fast because it's a way that people can save their money and protect the currency value. And with all these problems, there are similar opportunities to create new companies.
And so, how are the companies then doing that? Since is that okay? So there's the mother entity is in the U.S., Caymans or BVI, etc. But you have your ops entities in your different
Yes,
countries where you're
you
going to
have
operate.
local entities to operate.
Exactly. And then, but then, how is that cash being put back into, let's say, stable coins or the US? Like, how are you doing that? Let's say on a, like, how exactly and at what time intervals that you've been seeing your portfolio companies doing that to hedge
No,
against any risk that they might
that's
have in the
like
host country?
a particular company that's doing that for the consumer. Like it helps you open a bank account in the states, and if you are like middle class in Mexico and want to save, maybe the bank is giving you like really low interest rate. You can put it in, but you don't even know it's a stable coin. You put like in a normal bank account in the
Uh-huh.
US, and they give you interest and everything. So like that's a problem that you don't have like in the States or in Europe and a lot of parts in the world. So that's like a really a problem here from Latin America. And right now there are two big companies that are solving that problem.
Yeah, I would say to folks in Europe or other parts of the world that aren't as into the weeds of Latin America like Alex and I am, is I guess think about a couple things. Number one is the time horizon, right? So if you're investing in early stage companies, we're talking 6 to 10 year time horizons, right? Maybe if you're investing in funds as an LP, you're talking about multiple
Yeah,
decades, right, in terms of the time horizon. And just look at the overall macro forces. And are they pointing up for Latin America or are they pointing down,
correct.
right? And I would argue that they're pointing up. There's deeper and deeper integration with the U.S., especially Mexico, in terms of the nearshoring and all of that. You have a young population, whereas in a lot of the rest of the world, you got an old population, right? You have incredible natural resources in Argentina and Chile with lithium and all this for things that are super important to electric cars, to electric batteries, whatever, right? So at a macro level, things are pointed in the right direction. If I'd have asked somebody, hey, you want to go invest in this Chinese company called Alibaba in the year 2000, or right when Hong Kong finished, there was a handover from the British. I doubt there would be many people excited to take that investment, and they wish they would have, right? And so I think the time horizon is super important. I would say the second thing is I think it's a fair concern, right? That people have. In fact, being Colombian with the election of Petro back in June of last year, there was a lot of concern and fear among certain folks in the business community. And I remember the conversation I had with folks at the time was, the region is going to have its institutions tested, right? How important is rule of law and constitution and so on. And here we are a year later, and the world hasn't collapsed, right, for Colombians, and there's pushback in the legislature right there, so they don't have this majority, right? So it's not to say that there aren't going to be short-term ups and downs in the various countries, but I think I'm optimistic that the institutions will be strong, whichever side of the political coin you're on, right? That there's checks and balances because that's the way things are supposed to work. And then the third thing, this is just more me, kind of a dumb observation, but the more time I spend in Latin America, the more it really is a collection of huge cities, right? You go to Mexico City and it's like being in New York in the summertime. Or if you visited Latin America, it's like Medellin on steroids. It's this boom town.
Yeah.
It's this incredible place, right? You go to Bogota, you go to they're almost like city states, right? So what's happening in the countryside in Mexico is really disturbing, right? It's not good. But at the same time, it is from an economic perspective on the margin, right? And I think rule of law is super important, but really what's important is how's Mexico City? How's Monterrey? How's Guadalajara? Not how is, I'm going to pick a name, Michoacan or something, or Aurelia or whatever it is, small. It's tragic, right? You wouldn't want stuff, if you look at Israel, Israel is an incredible hotbed for startups. But every day I read about something going on in the West Bank, right? Um, so there's things that hopefully get better over time. But the real question is, in the major cities and the core of where the population is, how are things going, right? And I think if you go visit any of the major cities in Latin America, you come away super optimistic.
Absolutely, absolutely. For me personally, as well, being working and operating and living in Latin America, it has been a true eye opener. People don't really understand that because the only thing that they consume is negative news about the region, so they don't see the extremely high levels of advancements that you have in each country, basically within the whole region. Um, so it's great that you're basically validating also those points because the fears they're coming based on our surroundings, where we grew up, with who we grew up, and what type of information we consume, and then the only thing that you need to do is to go outside of your bubble to be able to get the truth out of it. Then I would like to jump on in a way in that when now you are looking into and sourcing deals, what we have encountered quite a bit is that there are some companies in the region, multiple different countries within LatAm, especially from people, the entrepreneurs who live in the US, who return back to their host countries, their home countries where they grew up. Their valuations are a lot higher compared to entrepreneurs who never went, let's say, abroad. They don't know what to ask. And then to be frank, when we do some comparisons of the deals that are in the region, is that a lot of people want to invest in Latin America because they see these deals extremely attractive. They know that, hey, if you're going to raise 500K, you're going to raise 1.5 million, you're going to go a long way with that. But now the valuation asks in some of the companies, especially with the people who live in the US and came back and founded companies, they're kind of getting into US level in terms of valuations. What are your thoughts on this?
Yeah, that's true. I mean, like, you have like two kind of companies, but I think it's the same in the US. Those one from elite universities that can raise like a lot of money at a high valuation, and those with normal universities that can raise money but like need to show a lot of traction, no? But the thing is that in the end, like at Series B, Series B, Series A, Series B, probably those valuations are gonna uh, be the same. Um, but yeah, I think you see that everywhere in the world. Like maybe the risk a little bit the investment by investing in someone from Stanford with a lot of network that has worked in a company in Silicon Valley, but also you the risk your investment a lot investing in a company with a lot of tractions. But I think you see those, maybe you see it more extreme in Latin America, the difference in valuations. But I think that's something you see everywhere in the world.
Yeah, I would agree with Alex. I think it depends how early you invest, right? Whether you've got traction metrics or not, right? So if you're starting from scratch, then you have one founder profile and another one that has more experience than the other one. Then in the absence of a lot of other information, I think it's just a risk factor, right? The investors feel a little bit less risk with the person with more of a pedigree and a profile. But I think once you get into operating metrics, right, and you've got data, then I think things start to even out. And so, like Alex said, does it even out? When does it even out? Maybe it evens out by Series A, right? But I don't know. My view of entrepreneurship is almost like I sometimes internally think of myself as a talent scout from the 70s, like going and visiting musicians and whatever. And you might visit a musician who studied at Juilliard and is incredible, whatever. And you're like, wow, I want to see if I can get that musician on a record label. Or you might go and visit somebody who's self-taught and is just like a virtuoso, right? And so I think there is some correlation obviously with people's background, but I think being an entrepreneur is almost like it's like an athlete.
Yeah.
It's like when you see an amazing swimmer, amazing soccer player. Yeah, some of them might have come up through the best programs ever, and some of them just came from the streets, right? But it's hard to tell at the very beginning which one is which, right? But when there's more data, I think that's where if you come in, there's a big difference in my mind between pre-launch, you know, and then launch with 3 months of data, launch with, a bootstrap company that's been doing it for 4 years, right? Now at that point, everything else goes out. You can appreciate them for, do they have that skill set and that knack? And you rely, in my opinion, you rely less and less on the other stuff.
Alex, any thoughts on this?
If you want to raise capital pre-launch, it's harder and probably you're gonna get a lower valuation. But yeah, I like a lot the analogy of the musicians with Juilliard and all. I think it's the same. Like, and in the early stages, like you have a lot of great founders, and you never know which ones are gonna be big companies and which ones are gonna close.
And I'm going to say one more thing. I think there is this romanticization of the founder. So I'm going to say something very contrarian.
We love it. We love
in
it.
the world of startups.
Bring it on.
I think people way over index on the founder. I have been at companies as an operator with amazing teams who were going after the wrong market. Everything was great on paper. And everybody talks about, oh, they'll pivot or whatever. Give me a break. We all hear it's survivorship bias, right? Everybody hears about Slack, right? But nobody hears about the 99 other pivots that didn't make it, right?
Yeah.
And so I view startups in a much more holistic thing. I think there was an interview once of the guy from Sequoia, Don Valentine, and they asked him a similar question. And he's, I asked him, do you care about the founders, the market, the whatever, like the 3 or 4 big factors? And he says, we bet on markets all the time. Right. And when he explained it, it was more, it's the system of the things that need to come together for a company to do really well. Obviously, if you have a stellar founder, if Elon Musk goes and starts a company, I'll probably be the first check if I could put it in there. Right. So there are exceptions, but more often than not, you're riding a wave. Right. I don't care how good the founder is. They're not going to be able to surf if there's no wave. And so, so I don't know, like obviously the founder is crucial. I'm not diminishing the role of the founder, but I also think that people need to be careful and not overdo the founder thing. Because if they have no traction, if the unit economics are horrific, maybe because of their reputation they can raise around, maybe figure it out. But if it's not there, it's not there. I don't care who the founder is. Right. And so
and then there's a question regarding, let's say, that all around the world people typically tend to follow the herd quite a bit, but now what we've been witnessing, especially in Latin America, is that because you don't have enough liquidity, you have a lot of first time fund managers, you have newly started funds in the region, especially in the past 2 to 3 years. There is a lot of companies, a lot of these funds, a lot of angels investing in same companies. And that can be a huge risk factor if these companies are not going to become successful. They're not going to be raising more funds. So then the illiquidity in the region will remain. How are you seeing this? And is this a problem in the region that you have been witnessing? First of all, for the audience who are not from Latin America, is typically, especially when we compare it to Europe or let's say more Western countries, in the Western world, you have a lot less investors per each round. In Latin America, for instance, for a seed round, you can have around 8 and 10 people or funds investing in the same round versus like a 2 million round is a one player in Europe and done deal. So the question goes around: do you see any risks associated with this fact? Is that people are investing and following the herd and investing in same companies? They're sexy, they're cool, and people just flock in. What are your thoughts on this?
I don't see it as a problem. Like, yeah, in Latin America, you see a lot more investors per round, but like if you see at the most of the VCs from Mexico, we all have like a very different portfolio. So we're not investing in similar companies, maybe one or two, but like you don't see you see a very different portfolio, and that's also great because it allows LPs to really see and to evaluate each fund
Yeah.
because the portfolios are really different. So you see a lot of small investors, but like VCs have a very different portfolio from one another.
That's super interesting to learn about kind of what happens in Europe. I think I would say this goes back to the fact that there's a dearth of capital in Latin America, right? If there were, let's say there were, if you take what Alex and I are doing, if there were 10 of us or 20 of us, multiply the two of us times 10, I wouldn't be surprised if it looks a lot more like Europe.
Yeah.
Or I don't know if that's the same case in the US, right? Because Alex has more money to deploy. I have more money to deploy. There's somebody else. So maybe the rounds, instead of having 10 people or whatever maybe the average is, maybe they have 5 people, or maybe there's one or two bigger checks and a few smaller ones, right? So I think part of this is structural because I think there is a funding gap, right? And so if the bigger funds in the region aren't really investing at pre-seed or seed, or they're waiting until they get to pre-series A, then if you're a founder, what are you going to do?
Yeah.
Right? You're going to go raise whichever way you can. So I think part of this is a function of supply of capital.
Yeah.
And then I was actually thinking about this yesterday, this issue. And it's hard to say, right? Like I was looking at what goes on in the US. I was looking up how does Sequoia invest in seed, right? And they prefer, there was a post on Medium where they prefer to avoid party rounds. They'll co-invest with folks, but they want it to be a smaller group of people. I just think that would be great if that was the case in Latin America because there was enough investors that could write bigger checks. I just don't think that's the reality. And then the flip side of it, I think, is at the very earliest stages. Yeah, I go back to the sort of like let's just deal with reality. You just got to get a product off the ground. It's got to get going. Once it gets traction, I don't think anybody cares who's in there before. If Google had 100 angel investors and then Sequoia saw Google's metrics and said, "Hey, I'm in at the A," they're in at the A. And so I think it's a pragmatic thing right now.
Absolutely. And this on this topic then is that um you're mentioning that, especially you, Ivan, that there's a huge liquidity problem at the very early stages of the region. I think that everybody agreeing on that. And Alex, you mentioned earlier on this pod is that one huge problem is the lack of exits in the region. So then there is also another topic is that you have a very huge liquidity crisis from post Series A, let's say especially B, C, D, and all the way to an exit. Do you see that this is going to be solved somehow in the next couple of years? You know, it's very tough to analyze and predict, but there's a lot of funds that are sitting on top of their money. There's a lot of dry powder. People are afraid to invest around the world, but so also in Latin America. Do you see that we're able to get the liquidity, increase in the region for these Series B, Series C companies that then would be showing the amount of exits, showing the positive cases, so we are able to get that money into the early stages? Or how do you see this evolving?
I think it's gonna happen. It just takes time. The thing is that the startup ecosystem is so new in Latin America that it's still like going through the first couple of cycles. But yeah, when I see like 8 years ago, how was everything? How many new companies? How many investors? I have no doubt that in 5 to 8 years there are gonna be a lot of possibilities for exit. And as we were saying, when you build a great company with great unit economics, um, then you're gonna find a lot of possibilities for exit. Maybe sell the company or do an IPO. Like I'm very bullish in Latin America, and I don't think it's gonna be a problem in over the next 5 to 8 years.
Yeah, I keep going back to this is Silicon Valley of the
Yeah, yeah.
70s, right? I think Sequoia's first investment was in Atari Computers, the video game company, or one of the early investments, right? Let's call it the early part of the 70s. Yeah, Apple didn't go public till I think the beginning of the 80s or late 70s, early 80s, right? So you've got a
Yeah.
cycle, right? I think what ends up becoming very important for the region, for sure, right, is that some of these early companies that have gotten traction that they go public, or that there's some big M&A, right? The Rappies of the world, some of the folks who've been very prominent in the ecosystem. Um, but this is just a, I don't know what you call it, a
Yeah.
pipeline, right? At the end of the day, yeah, let's call it 20, what are we, 2023? Let's say in 2024, 2025, those vintages, are there companies that have 50 million, 100 million in revenue, have positive kind of unit economics that whether they're profitable then or they're looking good, right? And then having a few of those go public or get acquired is going to be super
Yeah.
important for the region. But I similarly to Alex, I think that will happen. Um, and I think the other thing is things. I mean, if we'd had the same conversation in 2018, could we have predicted the liquidity that came into the region just a few short years later? And so, to me, I think everything, the whole world goes in cycles, right? Let's just say if at the end of this year, Stripe goes public, in the US, they stopped raising interest rates because you're going into an election year. If you remember back during the pandemic, I think Airbnb, DoorDash, all went public in December of 2020, I think it was. And then all of a sudden, everything was open again, right? And you have this ton of liquidity. So it's not unrealistic to see over the, I would say, from Q4 through the first half of next year, where the IPO market opens up. And if we get a couple of Latin American companies in there, then all of a sudden, like, hey, where are the best deals? Let's go. Latin America looks good again, right? Things can change quickly.
That is for sure. That is for sure. And then would you be able to then give as, let's say, a final theme, your personal vertical bets? Everybody's been talking about, let's say, let's take it outside of fintech, e-commerce, and logistics. Well, what is up and coming? What are the up and coming verticals from the region that nobody really talks about? So this is there is this huge trend on these very clear verticals, and it makes total sense. But now the underlying infrastructure is starting to be built. Fintech has been paving the way that any business can be conducted. Okay, we take that for granted as it is. It's going to be huge. It already is. Logistics problems, they're going to be solved. E-commerce, there's going to be loads of copycats, and it has been loads of copycats from where some other part of the world where they have been working. They're bringing that to Latin America. What is going to be something new that people are not expecting, especially for the folks that are not from Latin America?
I'm very bullish on health tech as well. I think it's in Mexico it's still really early. In Brazil, like you see amazing companies right now, uh, but like I think it's just a huge part of the money we spend. And as millennials are getting older, they expect to have like a service much better much better than what you have right now. I think it's early, but we're starting to look at companies and to do some investments more opportunistically and to learn. But yeah, I'm really bullish on health tech, especially over the next 5 to 6 years. Well, 5 to more years.
A lot more years, huh?
Yeah,
Yeah, gosh. So it's a tough one for me, right? As a solo GP, I have to stay very focused.
Of
So
course.
I almost exclusively look at fintech, prop tech, and supply chain. So anything I would say outside of that would be very speculative. I agree with Alex. I have been approached by health tech founders, and some of them look super interesting. And I'd agree that that sector seems ripe. I would push back on the idea that the supply chain and all these things are going to get solved. My wife works at Flexport, and let me tell you, they're like the kind of the OG in this area of digitizing the supply chain, and they got a long way to go. So I think some of the fintech, same thing. There's other parts of fintech that maybe haven't been touched as much. Um, the whole area, the notion of credit companies is totally out of favor. You talk to any VC here in the Valley, like, I would never invest in a consumer credit company. And again, I think there's going to be some amazing things that you guys are going to see in the area of credit, and the not only stuff that's been happening in consumer, but in B2B. And so I think we're still at the very beginning
Yeah,
in
yeah.
all of this. You know, to me, it's like, again, I keep going back. I sorry, I keep beating this dead horse of Silicon Valley in the
No, no, bring it
'70s.
on.
It's like if you again at the end of the '70s say like, we finished everything in semiconductors. There's nothing to be done, right? Only to know that Nvidia and all these other incredible companies are still to come, right? So I think even within some of these early areas, we're
Still
still
super
early.
early. It's just over there, Alex. You mentioned and even as well that you were okay outside of your core focus, health tech. You've been seeing this more, and you see this as a very, very intriguing domain. Um, let's say a little bounce towards founders and their health in this sense. And you already, Alex, and even you've been talking about the psychological health and support that you're providing for founders before investing. Are you evaluating the health, let's say mental and physical health of the founders before actually investing in these things or in their companies? Because what we see around the world around people is that a lot of people, we have our own issues, a lot of people have their traumas, and they can really in a negative way be triggered and in this hectic environment of launching your business and going for rough nights, long days, launching your products, testing out, humongous uncertainty. Are you evaluating somehow the founder health, and are they going to be able to survive the journey that is about to come?
not particularly that, but like the founder as a whole. Like you start talking with them, working with them, and you see how are they progressing. If what do they think of problems or challenges? And I think it's just what experience do they have. Like I think you just put like all the founder as a whole and evaluate it all together, not only like the health and mental part. But I think that's a real problem that we're seeing like all over the world. Like building a company is hard, and like we see a lot less tourists right now with the economic crisis. But building a company is hard, and most of them are gonna fail. So you just have to learn how to support them, and to maybe to close the company when it's time, because it's really difficult as a founder. Sometimes you are like so focused on building something that you lose sight of the big picture. And I think that's something all the investors must do, because we see a lot of companies, we invest in a lot of companies, and we see a lot of companies failing. And there's no shame in failing, but like you have to shame to you have to fail the right way. You have to close the company like with time and pay all your debts, and then you can take some time to rest and maybe give it another shot if you want it. But like it's always helpful for someone externally to help you uh, look like the whole picture, and you just close the company when the time is right.
Yeah, I agree with Alex. I think there's a difference between pre and post investment. Pre investment, it's the best you can do is try to evaluate the resiliency of the team. Do they have experience? Like, have they been doing this bootstrap for a little while? Right? Do they have other experiences where they've gone through that roller coaster? Right? That's why the second time founder is so attractive to many investors, is because they've seen this movie before, the ups and the downs, and hopefully they've learned from that. But I think beyond that, it's very hard, right? As an investor, I mean, you don't like, I couldn't even imagine trying to do a psychological evaluation, beyond like a gut feeling that like, I don't know about this founder, right? But you just, it's just so outside of your domain of expertise. I could imagine that the error rate would be so high that it's, at the pre-launch, the most you can do is really understand the resiliency and why are they doing it, right? Is this something that there's some passion, there's some, whether it's a passion for the space or a passion to win, whatever it is, there's something that feels very real, the so-called founder market fit. I think that's the best you can do. Post-launch, now, I think that's where Alex hit the nail on the head. As an investor, you see so many companies that you have, whereas the founder is an N of one, and they're living and breathing the ups and downs, and so you can be there sometimes just to be somebody to talk to and listen, right? Like, yeah, this is challenging. Look, this is what happened at another company, whatever, and so they don't feel as lonely, right? I think that's something that I've talked with a lot of my founders. They're like, I feel lonely, right? And so if you do your job well as an investor, you can be there to support them through that, right? And give them some extra information. Like Alex said, if it does look like it's not going to work out, reassure them that life is this multi-play game. It's not a single roll of the dice, right? The best thing for you is at this point potentially is like Alex said, shut it down and take a few more swings, whatever makes sense for you in your career, but not to get overwhelmed and shame if this N of one didn't work out, because it isn't an N of one. Life is an N of 100 or 1,000. I don't know what it is, but it's a lot of
Yeah,
N's.
absolutely. And then just a very last question is that because of you seem to be very open for a lot of people to reach out to you. You even mentioned at the very early of this recording is that you're just meeting with loads of founders. You're very open to first calls, and Alex, you as well, and you're interviewing loads of people. But then when we look at the realities of the Latin American market, is that still even today that a lot of the founders, a lot of the entrepreneurs are coming from certain privilege, meaning that they have had the opportunity to study in the US, they have been going to private schools. What about those folks who do not have that network? What about those folks who figure out a way through that craft? You made that analogy earlier to the musicians even, is that you're self-taught, but if they don't even have, there's less than 50 connections on LinkedIn and they don't even know what is venture capital, how do they get started? Are you reaching out to them? Are there events? How are people playing the game when they're not coming from these families that are little bit more well off? Because the reality, when we do the big comparisons between Latin America and, for instance, Europe, is that our middle class is extremely strong, and people are extremely educated, and it's quite a norm that you start playing the game and you have fair access to opportunities. But in still, what I see today in Latin America is that these entrepreneurs who are making it big and raising huge financial rounds, they're already coming from families that are pretty well off.
Yeah, I mean, you see, it's more difficult that like if you don't know about venture capital, probably you're gonna just start a company the traditional way and just bootstrap it.
Yeah.
But if you are like building a great business and growing, maybe you can meet some investors or and everything at an event. But yeah, I think it's more complicated to raise capital. But yeah, you just have to build like a super profitable business,
Yeah.
and eventually you're gonna learn about VC. And if you want to go that way, if you have a good business, you can go that way. And if not, you can like keep your whole company and build it just for yourself.
Yeah, I don't know. I guess I'm the outsider on all of this, right? Like the more I've gotten involved in Latin America, the more I see what you're talking about, Eric, right? With the super wealthy, especially I would argue in the traditional, like if we go back 40 years ago, there's a group of families in each country that have a disproportionate wealth and all of that, right? And you're not going to change that structure of society overnight, right? So it's not surprising that maybe some folks with some of those advantages are active in this whole ecosystem, right? But I also think like this is a huge opportunity for people of all different folks to get access as this has become way more democratized, right? I think within the region, there's several prominent accelerators. There's several prominent communities. There's several, now more and more people, like Alex was saying earlier, the ecosystem's bigger. So you don't have to be a member of a prominent family. There's probably within your network 2 or 3 hops away from somebody who started a company, who's whatever, or universities, right? Somebody at a school that maybe there's a classmate, right? I go back to what Alex said. Starting companies is hard. It's super hard. It's like I professionally growing up in the Valley, the mindset here was like, even though everybody reads about it and stuff like that, like the idea of a founder is still like, that's super hardcore, right? If you were giving somebody advice, a young person earlier in their career, you wouldn't advise them to go to a pre-seed company. What you would say is like, at the best, go to a Series C and above, because they've got traction, they've got capital, there's all this growth. So no matter what, you're going to be in an environment where you're going to be learning, right? It is hard to start a company. So I also don't think people should assume like anybody and their mother can go out, get access to whatever. Like you're going to have to work it, right? And I wouldn't be surprised over time if you see in Latin America what happens in the US is, right, you get people in their 30s, maybe in their 20s, they've gotten some good formative experiences. Maybe they worked at one of the prominent companies, right? And then they're ready. They've got their network that they built professionally. Now they go out and they start this company, right? And now it's not about like what family it is, because you've had 10 years to build your network.
Absolutely.
Right? That's typical. If anything, it's been interesting in the US with YC and organizations like that to bring it back to, dropouts from college. The dropout from college thing was not a thing in the US for many, many years. You hear these amazing stories of Mark Zuckerberg and Bill Gates, but they were not representative. And I think in Latin America, I don't know, I'm very optimistic on that front. And I would say that as an investor, as a GP or whatever, part of this is also how hard you hustle, right? So if you're relying on certain networks, then you're going to see the same deal that everybody else sees. And guess what? It's going to be a lot harder to make money unless you all get lucky and you bet on the one that it hits it out of the park. So I think as investors, you got to be out there hunting as much as you are trying to get inbound. So
yeah, you're absolutely right, and I've seen that we've been going with Bauti and all around Latin America and talking to a lot of entrepreneurs, and you find them in very surprising places. And Alex, what you mentioned about they have to bootstrap, and if we go back into the reality that a lot of the most successful founders are still coming from very good all families, but they're now coming because of technology is more widely adopted. People are more educated, no matter what is your socioeconomic background. They have been bootstrapping, and they are, oh my goodness, how resilient they are. They have been grinding and just barely getting by for 6, 7, 8 years, and now they're coming up with extremely great unit economics, especially what I've been witnessing in my travels to Bolivia and Paraguay. I'm extremely bullish on meeting those founders, and they're tapping a market that there's nobody. So then what I would love to say is that we have these huge markets where people are, going on their hunting trips and attacking these markets because they're massive: Mexico, Brazil, Colombia. But now you're looking into Ecuador, Peru, Bolivia, Paraguay, loads of opportunities because nobody's there. Nobody compared to even Colombia or Mexico. But hey, gents, thanks so much for participating today. Bao, do you have anything else to add for today, or You're almost getting a fever over there. Are you still alive?
I'm still alive and I enjoy this conversation a lot.
But thanks, Ivan, and thanks, Alex. It's been a privilege to have you on board, and I think that you two are guys that if any founder or any investor, basically from anywhere in the world, want to reach out, and I know that your doors are pretty much open, especially if they send you up a message via LinkedIn. You're pretty responsive.
For sure. And thank you for the opportunity. I just want to close just by saying I'm super optimistic. If I had more capital to deploy, I'd be a very happy person right now, because I think the opportunities are incredible, particularly in the quote unquote down market, right? The problems or the opportunities to solve big problems in Latin America they don't follow the economic cycle. It's like, it's still really hard to buy a house. It's still really hard to rent a house. It's still very hard to get credit. It's still very hard. There's all these things are still very hard, and there are solutions everywhere. And so I'm very optimistic. It's a long road. It's a hard business. So you need to partner with the right folks. But I think there's ways to go.
Absolutely.
Yes, exactly. I think there are a lot of opportunities here, and thank you for the space, Eric and Bautista. I'm always happy to tell more people about Latin America, because we need a lot more capital, and we have the opportunity, a great opportunity here.
Absolutely, and for the audience over there, if you really want to start practicing your Spanish, I highly recommend the podcast made by Alex. Is he's going through the Latin American entrepreneurial landscape, and that's how I got my Spanish game up to a very high level that I can survive nowadays. It's a great show, and you should tune in.
Thanks. It's called Fundadores, which is founders in Spanish.
Cool. Thanks, Ivan. Thanks, Alex. Thanks, Bauti. Have a good one.
Talk to you guys later. Bye-bye.
Bye.